Hi, this is Kirubakaran Rajendran. Welcome to another video with Groww. So, in this video, we're going to talk about trading stock options. See, many people are already trading options, but they are mostly active with respect to index. They would be trading with Bank Nifty or Nifty. But trading with stock options is altogether a different game. So, if you follow the same approach which you follow with indices, it might not work with stock options. If you follow whatever the strategy you do with stock options, if you do it with indices, it might not work. So there are certain things that you need to keep in mind when you are trading with stock options. See, currently there are more than 180 stocks which are part of FNO, which means that when you're trading with options in index, you trade mainly with Nifty, Bank Nifty or Fin Nifty Max. But when it comes to stock options, you have more than 180 plus stocks to choose. So how do you decide which stocks to choose and which one to trade? So most people, what they do is they check what are the list of stocks that are currently in hot news. So if there is some specific stocks where most of the news channel are talking about, they mainly take those stocks and they mainly trade it. But that is not the right way to do it. So in this video, I'll explain what are the things that you need to focus on when you are trading with stock options and what are the strategies that you can apply with respect to option selling as well as option buying. So I'll explain all these things in this video. What we have to do is just go to Google and type NSE India lot size. And once you type this, you will see the first link which will show specific details about what are the list of stocks that are part of FNO. So here, this is the link where if you download it, you will get an Excel sheet that will have what are the list of all the stocks that are part of futures and options. So as you could see in this link, so these are the list of stocks and their respective lot size. So as you could see, so it has mentioned all the details like what are the list of stocks that are part of FNO and their respective lot size as well. So this will give you a fair idea. For an example, if you're buying an option for Tech Mahindra, which is trading at around say suppose 20 rupees, then what is the actual capital that you need is 20 rupees into the lot size, which is 1200. So when you're trading with the indices like Nifty 50, Bank Nifty, you all know it is standard lot size, which is for Nifty it is 50, for Bank Nifty it is 15, for Fin Nifty it is 40. But when you're trading with so many stock options, the lot size keeps varying from stocks to stocks. So you do not really know what would be the required capital for you. So in that case, this file will be greatly helpful to you. So you can use this file and check what is the lot size of those FNO stocks, and also you can calculate what is the required capital to trade those options if you're buying options. Even though there are 184 stocks, if you go to NSE top contracts traded, the most active contracts, and then if you select what are the list of most active stock calls or most active stock puts, you will see only a handful of companies like Reliance, IRCTC, TCS, ICICI Bank, Adani Motors, or Dr. Reddy. So those are the list of stocks that you will see, and sometimes you will see ICICI Bank, Bajaj Finance, Infosys. So mostly these big companies is what you will see as the most active traded contracts when it comes to stock options. So if there are 184 stocks, you can't directly, even though you can trade with any of these options, it will not be very liquid. So very minimal number of buyers and sellers will be there. So it would be really hard for an option trader who specifically deals with stock options. If there is no liquidity, it would be really hard for him to get in and get out. So the best way to stick to what are the list of stocks to trade with stock options is always trade with stock options which are highly liquid. So how do we identify what are the stocks that are highly liquid? So in that case, the easier way to trade stock options is not to trade every day. Instead, focus on quarterly result season and then trade only those stocks which are about to give you the results. So I'll explain you how you can trade those stocks, specifically focusing on quarterly results. See, before that, I'll tell you an real-time incident which I faced in my own trading journey. So sharing this will be definitely helpful for most of the people who are specifically trying to trade with stock options. So this happened in the year 2014. So when I was working in an IT company where the Infosys results was about to be announced. So back then I was a new beginner. I did not know much about stock options. So what I thought is, okay, tomorrow the results is going to be announced, and definitely whenever there is such kind of news is going to happen, market will make the stock to move in one side direction. Either the result has to be good or it has to be bad. So if it is good, obviously the stock has to go up and my call option will gain money. and if the results is bad, the put option will gain money and call option will lose money. So what I thought is, instead of trying to figure out where the market will go, I decided to buy, out of the money call options and out of the money put options. So basically what I did was I just did a long strangle. So I bought a call option and then I bought a put option, and I was expecting the market to move in one-sided direction after the results is announced, like the next day. So if the result is going to be announced tomorrow, I just started buying options. So back then I was earning a salary of just 25,000 only. But what I did was I kept on buying options from morning to evening just before the result day, where by the end of the day I started buying almost 1.5 lakhs worth of stock options specific to Infosys, because I thought that definitely the market is going to move in one-sided direction after the result is announced. So definitely I can make money. But I did not know, I did not even realize that I'm risking almost 5 to 6 months of my salary in that just one trade. Back then I did not have so much awareness about all this position sizing rules, risk per trade and everything. So next day, usually what happens is, Infosys results will be announced just before the market opens. So next day I was waiting eagerly and I did not sleep the whole night because the position was so huge. 6 months of my salary was kept at stake. So I was expecting, I was praying, I was hoping that the market should give me some profits. So next day by 8:30, the Infosys results came, and most of the headlines in the news channel, it was stating that Infosys has met analyst expectation. So which means that the result is not bad, the results is good. So I thought, okay, so the put option might go to zero, the call option might go up, as definitely it's the expectation. So the stock is going to rally. Then what happened by 9:15 when the market opened, both my call option and my put option, both the premiums decayed. So the 1.5 lakhs of whatever the worth of call options and put options which I bought the previous day eventually opened with almost more than 80 to 90,000 of loss. So by end of the day when I tried to close all the positions, I ended up losing almost 1.3 lakhs. So out of 1.5 lakhs I've invested, I have lost 1.3 lakhs because the market did not move much. So basically, what happened that day was it just met the expectation. So it was not a big no upside nor a big downside. So basically, market was trading flat. But the problem was I did not know that you should not buy options before an event, because when you buy an option before an event, all these IV premiums would have shot up significantly and you are paying much higher premium. So a particular a stock options premium which was supposed to trade at 10 or 20 rupees would have shot up to 50 or 60 or 70 because of the expectation of the news. So because of all these rise in IVs, the premiums would have increased. So post event, always the IV crush happens and always the premium goes down. So that is what most of the retailers do a mistake. So they always buy an options before an event. Never ever buy an options before an event. Specifically, do not buy an options just before the result is going to be announced. There is a higher chance that you will lose money if the stock did not move much. So never buy an option before quarterly results. Always buy an options after the event, and it's better to sell an options before quarterly results or before in any of the event, because the IV premiums would have already been higher. So you are shorting at a much higher price, and there is a high probability that these options will decay next day after the results is announced or after the event is announced. So that is what we need to keep in mind. So I'll tell you how do you buy options with respect to trading stock options, and how do you decide when to trade doing an option selling with stock options. I'll explain you with an example, with taking a recent example about any of the stock which has recently published quarterly results. So let's consider Dr. Reddy. So as per Dr. Reddy results, the Q1 results for 2023 was published on 26th of July, and by 26th of July, end of the day around 4 o'clock, the result was announced. So let's see the chart. So this is the day where the results was announced, and the next day, as you could see, the market for Dr. Reddy, the actual movement was just 0.5%. It moved up and it moved down. There was erratic moves on both the sides, but by end of the day, it just closed at 0.5%. No big change. So what would have happened if you have bought stock options on that the previous day when the results was announced? So on 26th of July, it was trading around 5,476. That was the close price. So consider, if you wanted to trade this specific stock options, consider, you would have bought a straddle of 5,500 call option and both 5,500 put option. So if you have bought these call option and put option, if you have basically if you have traded short straddle with this option, let us see what would be the result looks like. So first I go to NSE India website to check what is the historical price data of the Dr. Reddy. So for that I just have to select the stock options from the drop down and select the symbol as Dr. Reddy and select today this year and select the expiry as 27th of July, because the result is getting announced on 26th of July. So we do not have weekly options with stocks, we only have monthly options. So we have selected that monthly option for July, which is 27th of July, and we have selected the call option, which is 5,500. So as you could see, on 26th of July, the close price was approximately around 5,476. So if we round it off, it will be around 5,500. Since that day it closed around 5,476, we are now rounding it off and choosing the other money options to be 5,500. So it is 5,500 call and 5,500 put. So in this case, what we have to do is we will compare two scenarios. What would be the overall results looks like if we did a short straddle, if you're selling an option, and what would be the results looks like if you're buying an option, doing long straddle. So in this case, we will see first what would be the overall results looks like if you're buying this option, 5,500 call option. So now we have selected 5,500. So on 26th, it was trading around 70 rupees. So we will mention that in the Excel sheet. So it is 70 rupees is the call option. So now we will select put option. So what is the price of put option of 5,500 strike? And that day it was trading around 96. So by 26th evening after the market closed is only the results is going to announced. So we are just assuming that if you are just buying the overall options just before the result is announced, so which is approximately around 325 or 328 before the market is going to get closed, we are assuming that we are buying the options. So we are just buying call option and we are just buying put option. So altogether the total is 166 points. So considering 125 lot size, so it is 20,750. So you are spending 20,750 as option buying both straddle. Now let's see where it is closed next day. So as we could see, the next day the market neither moved up nor moved down. It was totally zigzag and it just closed with 0.5% of movement. So it was totally flat. So now let's see what would be the overall put option value and call option value. So the put option value next day it was trading around just 1 rupees. So the 96 rupees which we bought, next day it was trading at 1 rupee. And call option, we will see how much it was trading. And call option next day it was around 41 rupees or 22 rupees. So if we take an average, say let's say 30 rupees. So the total is 31. So the next day you have the previous day before the results you have invested 20,750, and next day by end of the day it was closed around 5,000 rupees. So how much you have lost? So you have lost almost 15,000 rupees. So 15,000 rupees is approximately 73% of your overall capital is wiped out. So this is what will happen when you are buying an option just before the result is announced. So the premium decay will be very violent. So as you could see, the 70 rupees option ended up decaying to 30 rupees, and the put option 96 rupees totally decayed. It went to almost 1 rupee. So that is why it is not advisable to do option buying before the result is announced. So instead, if you have sold this option, so same 166 rupees, so instead of buying, if we did a short straddle, then obviously it would have decayed to 5,400 rupees. So instead of for option selling, you would have invested approximately what would have not, the same capital would have not been required. 20,750 is not the capital required for option selling. Probably you would be needing 1.5 lakhs of overall capital approximately. So in that case, you have made almost 15,000 rupees, so which is approximately for 1.5 lakhs. So 15,000 is for almost 10% is the overall returns that you made. So that is a very good reasonable returns in just one day by doing option selling just before the event. So this is the right way to get into options trading when you are dealing with no stock options. So never buy an option before the result is announced. It's wise to do option selling before an event. So in this case, how do we decide when to buy an options? So that is what we are going to focus now. So as an option buyer, what shall we do with respect to stock options? See, with respect to stock options, once the event is over, it will move in one-sided direction, either on the upside or on the downside. So what you have to do is check what is the candle high and candle low on the day of the result is going to be announced. If that day high is crossed next day, then by the end of the day, you just buy call option if the high is crossed. If the low is crossed, just buy put option. So I'll repeat once again, how do you define an option buying rules for stocks trading or with respect to stock options trading is always check if say today is the result that is going to be announced, check what is the day high and day low price for today, and next day check if the day high is crossed or day low is crossed. If the day high is crossed, then wait for the end of the day around 325, then just buy call option because the day high is crossed, and then there is a high probability that market might go in the one sided direction on the upside. If the previous day low is crossed, next day if the day low is crossed, then you just buy the put option. So the main important criteria is what is the day high and day low on the day the result is announced. On that day, track those levels, and the coming days, if those levels are breached, respective call option or respective put option has to be bought. So you can just buy a nearby OTM options. So if we have did the same with respect to the same Dr. Reddy example, we'll see how the overall results would have been. So as per our option buying rule, we have to check whether the day high or day low is breached the following day after the result is announced. So on this day, on 26th of July, the day high was 5489 and day low was 5402. So next day after the result is announced, that high was crossed. So as per the rules, we have to buy the specific options by end of the day. So by end of the day, it closed around 5500. So now we are just trying to buy an OTM options. So now consider we are buying 5600 call option, which is 100 points away OTM options. So similarly, I am selecting the stock options from the drop down, selecting the symbol as Dr. Reddy, selecting the year, selecting the expiry as 31st of expiry because we are going to hold the options for a few more days. So 27th of July was no expiry day for July month. So we are buying a next month expiry option. So call option selected and 5600 strike was chosen. So as per the rules, on 27th of July, we would have bought by end of the day, we would have bought, which is approximately around 146 rupees. So for this option, what would be our investment is 146 rupees. So we did not buy a put option. So we have invested 18,250 rupees. So now we have to see by end of the day or no, as long as what is the current price of Dr. Reddy. So as of now, the Dr. Reddy is trading at around 5,826. So it crossed our strike level of 5,700 and still going up. So as I mentioned earlier, if the day the results day high is crossed, it will give you a direction on the upside. If the results day low is crossed, it will give you a direction on the downside. So after buying at 142 rupees, currently it is it crossed almost 372 rupees and currently it is trading around 292 rupees. So even if we consider around 300 rupees, so our results so we have invested 18,000 and currently it is around 300 rupees, so which is approximately 52,500. So our overall returns, so this is the overall returns, so which is approximately 188% we have made by following a directional method of option buying, where we waited for the stock to move in one side direction. So it crossed the previous day high levels. So we bought call option, and as of now, since the market is kept on going up, currently it is around 300 rupees. It even went to 370 rupees and traced back. So the overall returns moved almost as high as 257%, but currently it is trading around 300. So even if you use a target of 100%, it would have easily breached. So now we are made almost 34,250 rupees of overall profits. So option buying works if you do it after the event, after the result is announced. So this is what I wanted to convey with respect to trading stock options. So remember all these points. So first, do not try to trade every day with respect to stock options. Always wait for the right opportunity. And second, there are more than 185 stocks with respect to FNO. So you can't trade all these stocks when you're dealing with stock options. Since many stocks are not really liquid with respect to options, so always choose the one which are mostly into large caps. So those stock options will always have good liquidity. And third, choosing the result season is the right way and best way to trade stock options. So always avoid option buying before the event and do option selling before the event, so that you will get good theta decay and the overall IV premiums will crush, so you get good profits. And option buying, it is wise to do after the results is announced, because once the result is announced, uncertainty will be totally removed and market could give you a one-sided directional move on the upside or on the downside. Based on that, you could trade with call option or put option. So this is how you need to trade with stock options. So in case if you guys have any questions, please post it in the comment section. I'll be happy to assist. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.